Well, given that, and instead of doing a stock of the day, we thought, given the market is suffering its worst intraday fall since March 2020, we'd actually ask you guys for your buy, hold, and sell. We'd better make it quick. So, Chris, right now, today, what would you be buying and selling?
Yes, I'm going to be a little bit lazy, Andrew, and leverage the buy, hold, and sell that I spoke to you about just last week. But they were all placeholders for things that I think are going on in the market right now. So the buy for me was Worley. Energy and materials have been the places to hide, if you will, or play even and make some money out of them. Worley's is obviously in the energy space or tied to the energy price. Oil is still at $120 a barrel, so I think there's still some perhaps juice in that trade. The hold was CBA. Again, it depends on what type of investor you are, but if you're a long-term income investor, I don't think you sell this one on, it has been a fairly brutal week or so for the banks, but I don't think you sell it. And of course, the dividend is coming up. And then the sell was Breville Group, and that is in the consumer discretionary space. And all three of us have talked about the difficulties that consumer discretionary will be facing. Undoubtedly, we'll do it again today when we talk about some of the consumer stocks, and that is just a place that I would avoid altogether.
Yep, okay, good one. Scott, likewise, what you'd be doing today? You spoke about those opportunities that these down days present.
So I'll try and keep it really brief. Buys are tough because on one hand you say I get a chance to buy the stuff I've always wanted to buy that's been too expensive. It's not normally the stuff that's actually been completely bombed out, right? The really risky stuff is the stuff that when we look back in 2 years' time, we're going to say, man, look at the gains on that from hopefully today. Maybe today's the low if we're lucky, but may not be. So it's a really hard one. I'm going to go for Technology One as the buy. It's a really, really high quality niche provider of IT services, ERP, enterprise resource planning software, largely to government, education, healthcare. Really, really stable customer base, super sticky customers. The shares have been sold off a little bit, not as badly as most other tech companies, and for the right reasons, right? Because it's simply a better quality business than most. But if you get a chance to buy that one when it's on special, I think it's a really good business to buy. It's one you really want to kind of grab and run with. So Technology One for me, TNE is the code. The hold for me is Corporate Travel Management. I own shares in this one. It's been a recommendation of ours for a long time. It's done really well. We're in that space, though, of what happens next with travel. On one hand, you say, well, we get back to some sort of normal. The shares are already kind of factoring that in. You've also got a question about, is there going to be a recession there in the US or here or both or right around the world? And that will potentially impact on discretionary travel. So corporate travel, a bob each way. I'm really happy holding it. I don't think it's time to buy, nor do I think it's necessarily time to sell just yet. So just have a good think about that one. I think when it comes to sells, this is a really tough one. The market's down so far. Frankly, all the stuff that looked expensive is a little bit less expensive now. But you want to focus again on the fundamentals. Chris mentioned some of those high kind of PE or not no PE, high expectation tech companies. I think they're the ones you want to look at and say, are the profits really going to come in, or did we get that one wrong? I'm going to plump for what's otherwise a favourite around the place, which is Pro Medicus. I think it's too expensive. P&E is the code. Good business, doing a really good thing. I think the investor got way too carried away. The opportunity for PE compression still remains really significant. Now, this one could go higher because it's largely a sentiment stock. You look at the PE on this one, there's a lot expected of it. So maybe it continues to do well just because that sentiment remains high. If the sentiment does turn, though, there's a lot of downside risk for Pro Medicus. If I owned it, I would be selling it now, taking the money, saying thank you very much.